Welcome to Charts Today Energy. My name is David Linton, and today's edition for Friday, the 9th of November, comes to you from London. I'm just back from speaking at the European Utility Conference in Vienna. And we're seeing most of the energy mix falling, although gas is actually bucking the trend a bit this morning, as is power. But if we look at markets generally, we're seeing a sea of red on the screens. The theme still being that strong US dollar rising on hawkish comments from the Federal Reserve, the market pricing in now very certainly a rate rise in December. That means the euro is weaker, and we're bearish below the cloud and bearish on all three time frames, with some pretty big downside targets for the euro and Japan. We're seeing the Japanese yen dollar hitting multi-month highs, so looking very bullish here for a breakout as well. Sterling falling back against the dollar and just entering bearish territory, and against the euro, sterling holding on to its gains. So just looking the stronger of the two against the Swiss franc, we're seeing sterling fairly flat. Markets were fairly mixed. We saw the US markets pulling back yesterday. We're seeing the futures down significantly today. The NASDAQ E-mini down 0.75%. European markets have opened lower. The DAX down 0.7%. And in Asia, we've seen some really big falls. The Hang Seng down 2.4%. Every single stock in the Hang Seng index falling. And then looking at gold, we see gold actually down in short term as well on that strong dollar. Looking at the energy mix, we see that Brent crude is falling lower, and we're seeing that sell off again this morning, just diving even further. We don't have any clear very short-term downside targets on the 1-minute chart, but on the 60-minute chart, we've had 70.04 and 70.25 in train $5 ago. Back in October, we had these targets to the downside, and that's where we're heading. We've got a new downside target of 67.84 on Brent crude. We're down more than 20% now on crude oil from the high, so that's seen as a bear market for crude, but we are seeing prices falling away quite heavily. Just bearing in mind that crude oil does tend to rise in the first quarter, so we may see this being the final sell-off to find a floor. But at the moment, we've got this downside target 3% lower. We've had a longer-term downside target, $60, and perhaps the most important thing is the upside target that we had here that was pointing above $100 has now been removed from the chart. So that's a bearish sign in itself. So Brent crude now clearly pushing for the downside. And looking at the correlations with the dollar, we see we're negatively correlated, which is what we'd expect, both on the short and medium-term charts. Looking at WTI, again, my long-term chart shows here that's falling back on the weekly, but on the daily we've been bearish for some time. That really has been in train ever since we crossed through around $68. That became the point where we turned bearish, and we've got actually got clearer downside targets on WTI. We've got on the 60-minute chart, we've got 57.90, 58.40. So $58 is looking quite conceivable there. And if we look at the 1-minute chart, of course, this is where you get the very short-term targets. 57.90 again, that 59.40, 59.50. That's where the 1-minute charts are pointing. $58 looking very likely. So on the basis that that $10 spread is going to be remaining, 58 and 68 are the levels that we might well see. Taking a look at US NatGas, on the other hand, here we are looking strong again, $3.58, holding on to those gains. We had a big jump this morning, and we're holding on to that. And we've got 367 on the 1-minute chart for US NatGas. 396 has been there for a while, so that's looking pretty bullish. And on the 60-minute chart, we've got $4.10, 361 as the target that we're gunning for at the moment. So US NatGas is really gaining some momentum now, and we're seeing the highest closing level. If we look at this weekly chart, if we close out these levels today, that will be the highest closing level since 2016. And if we get above that 375 level, then we're looking back to 2014. So we'd be seeing 4-year highs. Remember, us technical analysts, we love new highs. Looking at heating oil, going much the same way as crude, as you might expect. Downside downside targets there of 207, 213, 209, 214. We've got a longer term downside target of 194. Still looking bullish on the long term and medium term trends, but just starting to come under pressure and diving away. Very influenced by crude oil inevitably. Above much the same picture, downside targets here, 162, 154, and we are actually now in a bearish long-term trend there. Looking at European products, we start with coal, API2 falling back very substantially yesterday, and was looking like quite a good recovery there for a while, but we're back to this 88.50 level, so sharp falls there yesterday, down a further 0.2% this morning. The long-term chart is still looking pretty good, but the medium-term trend is now coming under pressure, and we are just seeing coal selling off. We've got downside targets of 84.68 on the long-term charts, but 87.50. This data all coming to you from Thomson Reuters Icon. Remember, if you're running on your Trayport screen, you will have higher liquidity in the screen, so you will probably see some slightly better numbers and maybe slightly different targets as a result of that more liquid OTC data. Looking at Richards Bay, we're off here as well, down at as well, and emissions falling away about 0.75% this morning after a very good run the last few days. Looking at the short-term chart, this is just really over the last 2 days. We saw this rise in the emissions price, and then we've been seesawing, and interestingly, we've got these downside targets on emissions. The 1-minute chart just giving us some new downside targets, 1855, 1870. We've got an upside target of 2020. Emissions very hard to call. There is quite good support there on that chart, but at the moment it looks like this little run that we've seen over the last few days might just well be unwinding into the end of the week. NBP is up this morning, just seeing that big jump, but we've pulling back a little bit, so we're just struggling to hold on to that opening gain. And if we look at the charts here, we do have this target of 79.80. That's a massive 17% higher, but we do have some mini downside targets, 65.90 and 64.90. So it does look like we are starting to move back towards those levels. So keep an eye on those 1-minute charts through the day. Again, if you're on your Trayport screens, you'll have slightly different targets because you'll have higher liquidity in the data. TTF, again, could go either way. We saw we've got an upside target not yet activated to 25.83. The downside target 24.38 was given and met. We are in a little bit of a short-term uptrend here, but the shortage of targets is just making it harder to call, and we're not seeing the targets clicking in on the 60-minute chart. We are short-term bullish though on both gas products. Looking at German gas, NCG, less clearly bullish, recovering a little bit lately, but just not looking quite as bullish. And Italian gas, much the same picture. German power is up very slightly this morning. We see here yesterday we just fell away, but interestingly, we do have this 1-minute chart. Some very small downside targets. Power actually quite difficult to call at the moment, and we're seeing that we've got targets in either direction, neither of which are very substantial, so pretty much where we're at. French power also looking much the same as German power, as you might expect. And just looking across the mix, we've got Polish power down 0.5% this morning. Again, the liquidity not great on these charts, but on your Trayport screen, if you're trading these products, you'll have better targets. So keeping an eye on these crude prices is going to be key for the rest of the day. Until Monday, happy charting. See you then.